So with this truce to push things off, it means we don't get, you guys are just helping me remember all the details. Rate won't go up for tariffs, and we won't close the entire gap by adding new items on. Apple got mixed up into that a couple weeks ago, by a logical conclusion that some of the goods would raise the prices for iPads, phones, and stuff like that. Is that really the bullish read-through here?
Well, the word bullish is the only thing I would kind of look at. It's more of a kind of make back up.
Okay.
That was the bearish case for Apple, one of the bearish cases.
One of.
So the little bit of a rally we got today and maybe some extension on that, to me, should probably hold simply because, again, these things are not coming tomorrow.
Right.
So in theory, we don't have to price for it going forward.
Nobody's been able to grasp the gravity, basically, of Chinese growth that is slowing. It's still a massive amount of growth, but it's slowing. And this is kind of the story of semiconductors the past year. Tariffs, I'm sure, were part of that. But if this doesn't immediately turn around, big numbers, then why don't these things continue to get hurt, basically?
Well, I mean, their ISM hit 50, right? Which is right at that level for people who know that 50 is, below 50 is contraction, above 50 is growth. That was the first time that had been at 50 in multiple years. So it's interesting. I think there's a perception that China is actually genuinely concerned about some of the damage that's currently been done and some of the damage going forward, which is why they bent but didn't break at this particular dinner. So there might be some optimism, but when you look at the intellectual property theft, which has been alleged by most countries, to me, China kind of looks at that and says, I don't understand what you guys are complaining about. We said you can sell to our people if you give us the technology. Now you're mad. Like, to them, that's the deal.
Kudlow said today, by the way, economic advisor in the White House, that they're pretty close to a tech theft
He's such
agreement.
an optimistic, happy guy, isn't he?
Well,
I love Larry. I've known Larry for a long time. He's an extremely optimistic guy. When he's negative, markets really get hit. We've seen that, right? He, to me, when he's negative, it's really bad news. But again, intellectual property theft, I don't believe that China views it as theft. I believe they view it as part of the deal they agreed to in the first place, and we're reneging on that. So it'll be interesting to see if they make strides on that. We're new highs.
There's kind of an interesting cost of labor argument in this whole thing that isn't always top of line. But I think you're right. I don't think they view it, and you sort of hear the comments, and mostly in writing, right? Through translation, it's kind of hard to get. But I don't think they view it as doing anything wrong. We sent all this stuff there to be manufactured for pennies on the dollar, would be here in the U.S., and they produce that much more cheaply and sell it back to the rest of the world. Like that's how it's worked for a long time, and that worked perfectly fine for everybody. At least on the headline level, until Trump came into office. And I think they're kind of saying, well, what was wrong with the old way? Like look how good we were all doing.
Well, obviously, there's a lot of places to get in there and say, well, it was working disproportionately well for one.
That's absolutely true, and I mean that's ultimately what was said. But I think it's really shined a light on what is that theft, and you see Europe saying the same thing, right? And that's happening. So even if we do find agreement, and I think, again, if there's pen on paper and we actually see something, I'm not sure what that's going to do to cost of labor, because if they have to then go do all this R&D in a different way on their own, how does that filter down into the cost of actually producing the goods? And I think there could be a more expensive kind of production cost going forward. Call it inflation, but if those things become more expensive, like that's the real world we would live in. So I'm not sure how that'll play out, but I think it's interesting.
Can I jump on something real quick that Bob said at the very beginning of this, but he was referring to just to Apple. But basically, this wasn't a bullish situation. It just proved a bearish case.
Okay.
So my whole thing is, if the reason we're selling off was because of all these different reasons, and there's all these bear cases out here, it's not necessarily bullish for what happened over the weekend, but it just removes one of those reasons why we went down.
Right.
And so then we just have a reason to kind of go back to where we were. So it's not that we're shooting to new highs and we have this great deal and all this stuff. It's more of just there's just less of a reason to hold us down.
I think there's a lot of evidence to that as well, because what held up the best today? It was the NASDAQ. I get the semiconductor argument on tech side, but other than that, there's nothing in that FANG group really is, you can make a strong argument, Bob, that there's not a lot of tariff implications, okay? I see AMD up 10%. Amazon had a nice day as well, up 5%. So to Alex's point, kind of to me makes sense, and it pairs well with Alex's case, because if it's not a bullish fundamental change for industrial companies and materials whose rally actually faded, the ones I could argue are probably most directly impacted by this, this is just basically a beta day where risk came out of the market a little bit and people bought the risk on stuff. So is that for the big picture, what does it tell you about what's driving things right now, Bob?
I think it tells you about the sentiment behind what was agreed upon. So, like, you look at a company like Deere, DE, right?
Yep.
DE did really well today and then faded.
Yep.
Simply because the soybeans are going to be bought, but for how long? How long does it affect the farmers? How long does it affect John Deere? When you go into the tech sector, again, back to what Nick was saying and then Alex brought up again, in terms of the intellectual property theft, and they don't believe it to be theft, they're still a very poor country. Some people act as if China is this wealthy country, but the vast majority of the population is very poor, and the Chinese government has said, look, we want the intellectual property to bring us up to where everybody else is, then we'll compete fairly. This happened with Japan, happened with Germany. China wants the same treatment. Trump doesn't want to give it to them. This is something new in the executive branch where he says, no, everything's got to be fair, right? Technically, it's not fair, but the rest of the world might see it as fair. I'm getting too long-winded. If they actually make progress on this, can you imagine open markets, no intellectual property transfer? I mean, that's amazing for tech. That's ridiculous for tech.
Okay.
2019. Not
So
only
there might be a fundamental reason.
I don't know if they're actually going to get anywhere.
Well, it's a fair point. It's just a couple logical leaps away.
Exactly.
Right?
Where does the NASDAQ go in 2019?
Right.
I mean, it goes through the roof. It doesn't stop.
Well, I think what you're saying is really a global growth story, right? So it kind of goes, maybe they're not tariffs directly, but if that type of situation happens and borders and doors open, what does that do for global growth prospects? Companies that derive their earnings from PE ratios and true growth going forward have to go up in that environment if people truly start to believe that. That's what their price is based on, right? Expansion into other markets.
Yeah. Alex?
Well, and going on what you're saying too, because I know you're saying, it's not a huge fundamental shift, it's a real actual reason why we're going up. Well, if these aren't that affected by fundamentals, then why did they go down as much as they did too? It's kind of just that overall sentiment, like you said, they are high beta names. These are the names that are going to move the most when that overall sentiment in the market goes one way or another.
Well, to be clear here, though, there's not just a pure sentiment, right? I mean, we have, for really the first time, and we've heard it a few times before, and it turned out to be false, which is the peak earnings narrative. In order for that to be false again, you have to have, I don't know what the data would be, probably the biggest beat in earnings history to go from 17% expected annual growth to leapfrog to 26, which we just had, which was the best. So fundamental side, unless there was, again, I keep coming back to this point, but unless you think it's 16% quarterly growth because all these CEOs drastically lowballed their guidance because of tariffs, then maybe we could get that. But if that's not the case, there is still a fundamentally driven concern that's not just sentiment, that's not just anything else, which is investors saying, look, I'm not going to pay up for growth the way I used to because it's not there. Did that change today, Bob?
Not today, but that's what we're talking about here. That's what I'm looking at. Because look, you go all the way back to the Fed with Powell. Okay, so Powell supposedly got dovish. There's been some analysts, myself included, who says maybe that wasn't as dovish as the market took it. But look at the yield curve. 2's 10, 17 today. 17. That's decades low.
Yeah, we're back. We expanded a little bit, and now we're heading back the other way.
We're back to recessionary levels. So the Fed needs to go away in the same way the crude oil prices need to go up. Doesn't mean they will, but they need to go away. They need to stop. They need to calm down. And I'm not doing the Kramer thing where like the Fed knows nothing. That's not what I'm saying.
Right.
The Fed's going to do what they want to do. Stock market valuations is not in their mandate.
Yeah.
But they don't want an inverted yield curve. So if that continues, they back off and possibly China and US have a deal. Wow. I mean, we get exactly what you're saying in terms of the biggest earnings beat ever.
So if that's then the case, when we see bonds rallying the way they are, okay, a year ago, we would say, or even just take it back to the spring, which is actually the argument that I think was very compelling at the time. Not enough growth around the world, basically. All the growth here, 10-year yield can't take off. If I'm a pension fund manager, I'm not getting jack in bonds, so I stick with my companies in the stock market for that, regular rate of return. Does that work this time, though?
It does. What was the headline when Powell spoke last week? Again, bonds proved to be smarter than stocks. That was the headline. It was a great headline because it was right. Are they doing it again? So yeah, I think that is the narrative. I think that could potentially be the biggest story as we come into the end of 2018, that you guys are playing what we're saying back here over and over again, saying, could this happen while it's happening? It's a 20% chance, not an 80% chance. But if this guy, and by that I mean the two guys, Xi and Trump, actually come to some sort of agreement that doesn't look like IP theft anymore, right? And they come to some sort of grand deal, and the Fed backs off. I mean, wow.
Yeah.
That's great.
Yeah, you've got this, excuse me, I'm fighting the laryngitis here, sorry. If you have that, and you have US and Canada all coming together, and Europe is basically right there, and now Brexit's not that big of a deal, there's something on the table, like, I'm not saying again that's gonna happen, but like, if all those things sort of waterfalled into place, I don't know, Apple's down basically where it was 6 months ago. I'm not sure that if all those things fell into place, remember we said this a couple months ago, is Canada and Mexico just the first, and this is going to start to take place by the end of the year, early 19? If those things happen, I think new highs are possible because people go, wow, there's this really frothy kind of growth aspect, and it could happen. Now, it seems much more likely that that doesn't happen.
Right.
I agree, and you see sort of this stalemate, and they go back to countries, and everybody goes home and says, well, it wasn't quite what it wasn't quite that.
Right
great.
now, we're doing what Alex did very well this weekend, was go over a lot of. There's a lot of ifs. And the last time I was on with him, he mentioned he's very good at pointing out if this, if that. These are all ifs. He did that last time I was here, and he did it this weekend. So it's a lot of ifs, man. But if those ifs become yeses, that's the story we're talking about all next year.
Here's the one I still have problems with, though, and I can't get over the logic that seems to go against each other, which is how do you get the ideal trade scenario and the ideal growth scenario and still get a dovish Powell? Because your point is that, all right, if Powell stays easy because our yield curve is flattening, if all the growth stuff comes to fruition, that yield curve's not going to flatten anymore, right?
So, well, that's where this time is different. Where was PCE? It was lower again. It missed. Europe's PCE missed. These are things that we don't necessarily, I shouldn't say manipulate, that we can't really change.
Sure.
The price is the price. We've talked about this before on the show. Discounting economy. When was the last time you bought something without a discount code, without a Black Friday, without a Cyber Monday, without a March Madness sale?
Well, this is the fun of the economist debate, right? Because they go, well, that's because Powell's going to have to go anyway, even if that stuff doesn't show up.
Right. Are we structurally different because there's just not going to be inflation until we really grow globally?
Last thought for us, Bob, before we let you go. What are you going to be looking for here in the week? Is it about employment on Friday to see if that inflation comes through? Is it Powell's speech is canceled because we have the funeral for Bush 41?
Right. It's going to be non-farm, and again, I just want to go back to how we started this by saying that I don't think this particular agreement at dinner this weekend is a big deal at all. I really don't. We needed to rally off of the news that we got, as you described this weekend. So I would say it's non-farm. I would say you're looking at wages again. But then again, if those wages don't go into prices, who cares?
Yeah. All right, there we go. Bob Iacchino, the founder and chief strategist at Path Trading Partners. Hey, we got big numbers on the retail side. Maybe it'll finally show up. People are spending like crazy. All right, Alex Coffey and Nick Diderakis as well from TD Ameritrade. Always a pleasure having Bob with us.